Hey everyone, good morning. It is half an hour before the market's going to open on March 19th. We're not going to expect too much happening today, so this particular session is probably going to be kind of short. There's not a lot going on other than the FOMC meeting, so nothing's going to happen in the market. Nothing major is going to happen in the market until we get that Fed announcement. So today we're really going to be looking at technicals, not too much else. And well, it's probably not going to take that long. So let's see how we're opening up with futures. Make sure that's refreshed. Yeah, so muted on the Dow, that's about 0.1%. S&P 500, we're looking at about 0.35, so just on the cusp of non-random, and NASDAQ down 118 points, which is about 0.65%. Yesterday we were up 200. So given, like, normally this would be, oh gosh, we're kind of down, and that's a really negative bias in the market. But given that we were up 200 yesterday, this is not as big of a deal. So yesterday, what happened in our trading session was we gapped up, we traded a little bit higher, and then we drifted lower the entire day. So yesterday, actually, it traded very technically, or actually, I should say, it traded very seasonally. The tendency in the market is to have a down day on Monday, down meaning relative to its open, and actually usually down relative to the previous close as well, but that's not what we got because of such a huge gap up. After we gapped up and went higher in the morning, we drifted lower throughout the day. So without any other outside forces in the market, the index traded very both technically and seasonally. So we should probably expect the same thing today because there's no other forces really in the market. Tuesdays tend to be the opposite of Mondays. We will start lower and drift higher. So when we open, we won't be surprised if we drift lower and then bounce and then go higher. Or we could go, since we gapped down, we could just directly move higher. About 70% of the time when we open, we trade in the direction of the previous day close. In this case, it would be up. And so we could just trade higher. So given that we've went below this purple line, we probably should be checking the next purple line down and say, hey, if we break this, that's the 508 and a half level, which has been the EMA 20 now, I think, because it was, yeah, let me just double check that. EMA 20, yeah. So if we go below that line, then we'll be below the trend line, and we'd be saying, hey, let's be cautious right here. Well, we should be cautious if we break below this line, but what I'm saying today, it's not that likely. So we're not going to freak out that we have a downward bias today. All it means is that we're unlikely to have a green bar at the close, just like yesterday. Nope, didn't hold for yesterday, but today it did hold for yesterday. Sorry, we're unlikely to challenge the previous day close, which was absolutely true because we gapped up huge yesterday. What we're saying is that today we're unlikely to trade above the previous day close. Well, not in the SPY. The SPY is on the verge of random, but on the QQQ, we're unlikely to trade above the previous day close. It doesn't mean we can't drift higher along the way. And if we come and we challenge that level in the SPY, this next purple line, we're not going to get too concerned because there's not too much happening in the market. Everything is sort of on wait and see mode for the FOMC. So our expectation is that we're not going to trade in a huge range, just like we didn't trade in a huge range yesterday. Yes, we had the gap, But after the gap during the actual session, we didn't trade in a large range. We have a gap today, but during the session, we're not going to expect that we trade in a large range. Today, we're going to expect that the higher probability event is to drift upwards throughout the day. So it's unlikely we're going to break any support levels today. Doesn't matter if it's the S&P, QQQ, or the Dow Jones. If I look at the QQQ, this bottom right here is a important level, because on Friday, that low did, or even the close and even the open was below the EMA 20. It was a break of trend, and we did bounce back up above the EMA 20, but we closed right there. And today with the gap down, we're kind of in middle of where we traded on Friday. So what we want to see is that it drifts, if it does drift lower, that it gets supported at the previous low on Friday, and it bounces from there or stays right there, given that we have the FOMC. And exactly what we were just saying a little bit earlier, we're not going to expect it to break today. Maybe it'll break after the FOMC announcement. If people are very encouraged by the FOMC announcement, then it'll go back up. But today should not be the deciding day. If anything, it'll be tomorrow. So we're not going to freak out again if we come down and we challenge this level right here, the 432.75. It's going to be all right. We're going to most likely bounce off of it during the day. And given the seasonality, again, on Tuesdays, we're expected to drift higher throughout the day. So we may see some people panic if we approach those levels, but we're going to know better. We're just going to be very calm throughout the day. It's if you want a day trade today, then just know those levels, but we're not expecting a huge range. So day trading could be difficult. I actually day traded the SPY yesterday, and even though I caught great, I was in around here as a short. By the end of the day, it was not significantly lower. So I actually ended up kind of break even because I traded a 0 day to expiration. So the time value on it just kind of eroded everything, and I didn't actually make that much money. It was a very minuscule, not even, not significant at all. It might as well have been 0. So the range that we're getting throughout the day is not that great. It's not that significant. So day trading may or may not be worth your while. It might as well just take today as sitting on the sidelines, sort of like yesterday. We're not going to expect a huge range. There's always the chance that I could be wrong. I'm always speaking in the higher probability event. But given that there's not other forces there, it's really unlikely that we're going to get a huge amount of range. It's really unlikely that we're going to break any sort of support level. So we really do want to wait and see what the FOMC says and how the market reacts to it. It's not just going to be, do we cut rates or not? We're pretty sure, 99% baked in, that we're going to not cut the rates. So it's going to be a lot more significant what they say during the conference afterwards. So we have the announcement at 11 West Coast time in California, so 2 p.m. Eastern, and half an hour later they start the press conference. So we shouldn't see huge movement based off of that 2 p.m. number. We tend to get a little bit of volatility spike during that number, but tomorrow are really going to watch carefully at 11:30 or 2:30 instead of 2 o'clock, because what Powell says and any sort of indication that he gives on the timing of when rate cuts will actually begin is going to be very significant for the markets. So really, this is the point. If you are concerned about the volatility, or if you're concerned about the unknown of what Powell might say, then it's a good time today, and you have part of the day tomorrow to get your portfolio flat or neutral. And that's what I'm doing, just because we are at such a deciding point in the market that the FOMC, if they say anything that the market either likes or doesn't like, it could send the market in a very directional. So rather than trying to anticipate that direction and take advantage of that first move, what I rather do is watch the market react and pick a direction and then go into position on a continuation move. So if we get a extreme negative reaction in the QQQ, for example, tomorrow, well, this MA50 is not that far away. So if I say, hey, I'm going to go short tomorrow, yeah, I might catch that nice move to the MA50, but then I better be quick to react if it bounces off of it. What I'd rather do is say, hey, we trade all the way down to the MA50 tomorrow because of some FOMC announcement. I'll wait for it to retrace and re-challenge the bottom right here. And by that time, the MA50 will be kind of even closer to it. And then see if I get confirmation to the downside again. And then I would go in, because that's going to be a much smoother and muted move than the huge volatility move off of the FOMC announcement. So I'd rather do that than try to roll the dice and see, hey, it's going to go up or it's going to go down, because I don't have a good gauge. I don't have a good sense of the probability of the move upwards or the move downwards. So that becomes a gamble for me. Other people may have their system, the proven system of trading an FOMC announcement. I don't. And I doubt other people do also. They might think they do, but I kind of doubt that they do, because really we might be able to predict whether or not the FOMC is going to cut or not, but we have no way of predicting, at least in my opinion, no way of predicting of the words that are going to come out of Powell's mouth. So I'm going to be sitting on the sidelines and trying to get my portfolios as neutral as possible before that announcement. And then there may be a day or two while we wait for the market to react, and then go back to a support or a resistance level where we once again have high conviction, high probability before getting into position again into our portfolios. So we just have to be comfortable sitting on the sidelines in a neutral position or all cash position for a couple of days, because that's how long it could take for us to get high probability events back into the markets. So let's take a quick look at the Dow Jones. Yeah, same thing. Dow Jones has been really muted. So today, 0.1%, I think it was, on the futures, and then the previous day was like 0.17 up. So we never moved beyond the random region in the Dow Jones, and you can see how muted this is. Sideways trading has been. So we're getting close to that MA50 converging in right here. It looks like we're just going to keep on chopping in the Dow Jones. The FOMC could change that. But for now, actually what a really great trade would have been, it would have been like an iron condor or a neutral, a non-directional trade in the Dow Jones. But probably a little too late for that. I wouldn't consider it at the moment, especially given the FOMC coming up. Actually, you could probably get a little bit of money if there's volatility, if there's implied volatility in those options. I don't know if there is, but there might not be, just because this has been so flat for a month now. So that's pretty much all to talk about today, and nothing else that we normally look at is going to be relevant. The FOMC is really taking over the market right now. That NVIDIA conference might affect the QQQ, but not really the Dow Jones at all. So but we're not really going to expect much. The FOMC still trumps that. So we're really not looking at any outside forces after the FOMC announcement. And then, so for example, maybe tomorrow we can start paying attention to that NVIDIA conference. But for now, we're just going to be in wait and see mode until the FOMC actually announces what they're going to do. And actually, more importantly, when Powell speaks at the press conference afterwards. So that's it for today. Don't get too excited. We're probably going to get a muted day just like yesterday. And if we come down and we challenge a support level, don't get too excited about that either, because seasonality and technicals should operate very strongly today, given that there's not really any outside forces or any news that are going to be operating on the market. That's it. Have a wonderful day, and I will see you in the aftermarket session.